Welcome to the Tokenized Economy. Here is today's explainer on wallet-native tokenized equities. So we've already talked about how those broker-dealer models first brought equities onto digital platforms, but now we're going to take that a huge step further and see how these assets are being, well, unleashed to move freely across the entire on-chain world. All right, so to really understand where we're headed, we first need to do a quick refresh on the foundation we've already covered, that broker-dealer model for tokenization. Just as a quick refresher, this model is basically built on three core ideas. First, you've got real-world equities, stocks that are bought in the traditional markets. Second, those stocks are held securely inside regulated infrastructure, like a broker-dealer. And third, tokens get issued that represent a contractual right to the economic exposure of those underlying assets. Simple enough, right? Okay, so the really crucial point here is this. This model isn't about reinventing the stock itself. The source of the asset, that stays exactly the same. Instead, this is all about completely changing how we distribute, access, and, ultimately experience that asset. And that leads us right to the big structural transition. We're talking about a fundamental shift from an asset being tied to a specific account to an asset that lives inside a wallet that you control. I mean, just think about the difference here. On one hand, you've got the traditional platform account, right, where your assets are basically locked into one ecosystem. But on the other hand, with a wallet-based model, your assets are in your own self-custody wallet. What does that mean? It means you can transfer them directly, peer-to-peer, and you can access them across tons of different on-chain environments. It's literally like going from a walled garden to a wide-open field. Okay, so how does this all actually work under the hood? Well, the best way to think about it is as this really clever two-layer system that perfectly balances regulatory compliance with that on-chain flexibility we were just talking about. So you've got these two layers. They're distinct, but they work hand in hand. First up is the permissioned layer. That's all about primary access. And then you have the on-chain layer, which is where all the secondary distribution and movement happens. Let's break each one down. So layer one, think of it as the regulated gateway. It's the front door. Access here is controlled, and yeah, it often depends on where you live. You'll have to go through KYC, know your customer, and other checks, pretty much just like you would in traditional finance. And this is the exact point where tokens are minted against those fully backed, real-world securities. It makes sure everything is compliant and properly linked to the real asset right from the get-go. But once a token makes it through that gateway and gets out into layer two, oh man, that's when the magic happens. Here on-chain, the token can just move freely between wallets. You can send it peer-to-peer, 24/7 anywhere. And it can interact with a whole universe of other on-chain systems. It creates this incredibly dynamic and super flexible environment for the asset. So this whole two-layer architecture, it's not just a cool technical detail. It actually unlocks some seriously powerful new capabilities. And more importantly, it gives us a core insight into how these systems are designed. So, what does this actually mean for you, the user? Well, it means your equity exposure is now portable. You can move it across different platforms, different wallets. You can transfer it 24/7, completely forgetting about traditional market hours. You can have it interact with other tokenized assets. What's happening is that traditional stocks start to act just like programmable native digital assets. And this right here, this is the key insight. The legal ownership of the actual stock, it never leaves that regulated traditional custody layer. It stays put. What's being represented and transferred freely on-chain is the economic exposure to that stock. This separation is absolutely fundamental to how these systems work. Okay, so let's zoom out a bit and see how this fits into the bigger picture. It's really important to place this whole wallet-native model in the broader context of tokenization and, of course, the evolving regulatory landscape. Yeah, from a regulatory standpoint, let's be clear, this is a work in progress. There are still some big questions being worked through, like how exactly should U.S. securities be represented on-chain? How do you manage access for investors in different countries? And what about shareholder rights, like voting and disclosures? These are the challenges that firms and regulators are actively tackling right now to build out more standardized frameworks. And you have to remember, this wallet-native approach isn't happening in a vacuum. It's just one of several ways tokenization is playing out. For example, you have issuer-native models, which try to tokenize ownership right at the source. Then there are exchange-led models, which are focused on upgrading the core market infrastructure. And of course, as we've been talking about, the broker-dealer model, which has been all about improving distribution and access. But here's the really crucial point. This wallet-native evolution adds a powerful new dimension to that whole landscape. Its unique contribution is making financial exposure truly portable and composable. And composable just means it can easily interact and be combined with other digital assets. Think about it. You could use a tokenized stock as collateral in a decentralized lending protocol. That's something that's just flat out impossible with traditional shares. And all of this brings us to a final and I think really powerful idea about where this is all heading. If there's one thing to take away from all this, it's that tokenization is not converging towards some single perfect design that's going to replace everything else. Not at all. It's actually expanding into this diverse set of models, and each one is shaped by different choices in infrastructure, regulation, and distribution. What we're really witnessing here is something much more fundamental than just, digitizing stuff. This is the gradual, thoughtful redesign of how assets move through our financial system, how they interact with each other, and ultimately, how we as users get to experience them. Hey, thanks so much for joining us for this explainer. Definitely make sure to subscribe for more deep dives into blockchain, tokenization, and financial markets. And hey, if you have questions or there are topics you'd like us to cover, just let us know in the comments below. We'll see you next time.